America is fighting back against China's weaponization of the global rare earth minerals market. Beijing controls nearly 85% of the world's rare earth processing capacity, essential for producing a range of items from catalytic converters to fighter jets. It's the focus of this week's Barron's cover story. Barron's associate editor Al Root joins the panel to break down opportunities in the sector for your portfolio. Al, really interesting story. Give us a quick primer. What are rare earths? Where do you find them? Why do you need them? And are they really that rare?
So they're not that rare. There's deposits all over the world. They got their name because they're not usually found as standalone deposits, and they can be tricky to refine. But they are, like you say, in just about everything. Your phone, F-35 fighter jets, and it's a lot about magnets. And I brought everybody a magnet.
Wait, no way.
You get your Wall Street Bull fridge magnet, and if you turn it over, it is made in China. I failed to get the expensive kind, but these are the types of things that we are.
See what the excitement is about.
Dealing with.
Geez, no wonder. This is a great investment opportunity.
I do feel like you're holding back some of your passion for rare earths. I want you to really unleash the beast here on magnets. These are you need them to make motors for everything from cars to robots. We can talk conductivity. You need rare earths for batteries, computer chips, lasers. You can add to the list microwaves, medical imaging, fuel refining. Do not get me started about frictionless bearings.
Oh, boy.
Remember what happened the last time.
So that's a great point, Jack. Al, explain to me. Back in the 80s, the U.S. made half of this stuff, 50% of the world's supply. Now we're not making it, and it's oh so much more important. How did that happen?
Yeah, oh so much more important. The use of these things basically quadrupled since the turn of the century. And like Jack says, it's in magnets, and it's in everything that's in this modern economy. It's not a big industry, though, about $2 billion. And, China became the world leader that has less environmental regulations, but also just sort of the old-fashioned way. The government money in China was willing to earn less money than Western capital providers. You take that return difference over 40 years, and suddenly you have a monopoly.
Got it.
Well, it is interesting because you do bring up a good point about that. We were very much, a front runner in this industry, and now we've sort of become the come from behind, hopefully, really, bringing this to bear. But how do we become self-reliant again, and how does that sort of shift as, we evolve the industry?
Yeah, intelligent policies. The Defense Department did a deal with MP Materials. It had sort of three legs. It had a price floor to ensure that the Chinese couldn't sort of bankrupt new American providers of these products. It had a guaranteed offtake agreement, so all of the product in these new facilities would be sold to either the Department of Defense or others, and it took an equity stake, right? So it provided capital to build new facilities. So that really was generally seen by Wall Street and pundits as a really smart way to do it, and it puts us on the path basically to break the Chinese monopoly. Now, it doesn't happen overnight. This was a 40-year process for the Chinese, but by end of the decade, 5-10 years, it won't be an issue for the Defense Department. We'll be well on our way to doing our own materials.
I mean, can the U.S. though really gain everything it needs from U.S. soil? It feels like I was just reading not too long ago that we made the deal with Ukraine to get some minerals, some rare earths from them in that deal. How does that kind of play in? Do we need our partners in this kind of case scenario?
You need your friends and allies. There's no doubt about it. And we have a lot of discussions on trade on this table. But that critical minerals deal, rare earths are a subset of critical minerals. Critical minerals are basically anything you need for this modern economy, copper, nickel, and all that other stuff. And, so the U.S. did a deal with Ukraine. That's another capital provision deal, and it's an example of the kinds of things you can do to make sure that you have the raw materials flowing into the U.S.
So, Al, as an investor, how do I play this? Are there stocks I could be buying?
I mean, we like MP Materials, and there's really a couple of reasons. One, it's the leader. It's the largest rare earth producer outside of China in the Western Hemisphere. It has a good management team. It has a flawless track record of execution. It was a company that became public in a SPAC merger in 2020. Excellent history, and they are the leader. And it's a little bit like buying the Tesla of rare earth mining. Now, Tesla was you could have bought a lot of EV startups, but you probably just stuck with Tesla for the last 10 years. That's how I feel about MP.
I feel like when a theme like this becomes popular, there's 20 new startups with rare earth in the name that pop up, and then there's 20 ETFs that buy those 20 companies in various assortments. Are we seeing that now?
Yeah, and this is to the MP point. There's USA Rare Earth, again, a company with a mine that is developing, doesn't generate revenue yet. A coal company, Ramco Resources, wants to essentially exit the pivot from the coal mining business into the rare earth business. Again, not generating rare earth revenues. Maybe just wait to see how those go.
And if you really want to diversify, there's no great way, but there is an ETF, the VanEck Rare Earth and Strategic Metals ETF, REMX. Has about a third of the portfolio is in rare earth, but you get a bunch of other stuff. You get some Chinese companies, you get some of those critical minerals. It's not perfect, but it is one way to look at it.
And small world, I was on a plane on Wednesday with Jan van Eck. We should have asked him about the rare earths.
Next time, Jack.
Oh, okay, we'll have him on the show.